Ladies and gentlemen, welcome to the midday market madness. And boy, oh boy, that's exactly what it feels like today. The SoFi stock has once again diluted shares. I remember having a conversation with Data Driven Investing, and we were talking about, do you think there's a possibility that they raise again? Absolutely not. No, not a chance. They're so overcapitalized. Why would they need to? And boom, here we are once again. It's unbelievable, is it not? But it's a matter of what is this for? And I've been giving this a lot of thought. Personal loans, they have so much additional capital. So let's sort of try to understand something really quick. And I'm already going on the SoFi tangent. We could take a look at the stock market maybe before we jump right in, but the SPY is still up, okay, 0.3%, and the triple Qs, the NASDAQ 100, is up 0.4%. I'll also just check the crypto market really quickly. Bitcoin's down 3% on the day, and Ethereum, there's on my hat here, down 3.3%. We still believe Ethereum, but I would like you to be back at 3,200. That was definitely a better place for me to be. Okay. So I did want to talk about SoFi, at least for a good portion, or at least the beginning here, while people are coming in. So I did buy today. Okay. I bought the dip down. I think it was somewhere in this area, the 27 somethings. So ended up buying some additional SoFi shares. And the reason is because whenever dilution happens, the market cap essentially goes up even if the stock stays flat. Okay. So it makes the company more expensive, and I have less ownership of the business. However, alongside that, whenever the stock crashes, it can adjust for a lot of that dilution. The dilution, which I think will be a full hit, which is about 4.85% of outstanding shares. Now that we're down 6.6%, it's actually cheaper than it was before the dilution here today. Okay. So that's pretty interesting. And that's, we don't know if we're going to get into the S&P 500. Neither does SoFi. Let's say it's a low chance of happening. Okay. Place it at 5%, 10%, whatever. There's no risk if we don't get in, but there's risk if I don't buy more and it does get in. Now, I put the chance that SoFi gets into the S&P 500 over the next 12 months, meaning today's rebalance and then the next 4-quarter rebalances. And that's not inclusive of if there's, two S&P 500 companies that end up, sort of merging. Now, Warner Brothers and Netflix are now going to merge into one business. Like, there is large acquisitions that are happening on a day-to-day basis that could open new slots for new businesses. Over something like 200 companies in the S&P 500 are not eligible for the S&P 500 right now if they were to gain entry today. So they were eligible at one time, but then the requirements and eligibility have raised, and some of those companies have failed. Okay. So there's a lot of slots that I think need to be replaced with new businesses. And there's really 5 key companies that are available for the S&P 500 today. Really prime slots. SoFi is one of them. So my belief that they get in the next 12 months and 1 days, essentially that would be 5 rebalances, is sky high. I have got huge belief in that. So that immediately puts a 20%, maybe 30% upside on the company, knowing that indexes are going to be buying in. Some people said, oh, well, you know what? It's not, the appreciation of the stock does not happen because of S&P 500. No. A lot of the share price before the S&P 500 is not because of the S&P. But afterwards, it definitely is. It's not even that people need to like SoFi. It's forced buying because they like the S&P 500. Most retirement accounts, most funds and everything that will benchmark themselves to the S&P 500 is trillions of dollars, trillions, will be forced to buy a small percentage of SoFi in order to put them on their books, to have that weighting. Not to mention, this is still a growing business. So that's extremely important to realize. They're fast growing. And then I want to talk, even before I look at the chat, I want to stay focused here. Why did they dilute? Is it from a position of needing to raise money? Is this OpenAI with massive spending needs and not profitable, something like this? No, that's not what we're seeing. And by the way, the companies that are growing that fast that still need to dilute, their growth rates are a lot faster than SoFi's. So that's what's really interesting me here is, are they raising to accelerate growth past, the 30% expectations, the 35% expectations? Are they going to, try to go even faster? Remember this as well. Anthony Noto, because people think that they're diluting to give, I saw a couple comments on my latest video that said they're doing this to give the C-suite, like the management team, bigger bonuses. The performance-based stock units are the biggest bonuses. Those are $100+ million. Like Anthony Noto's full package, I think, is something like $155 million payment. That's not inclusive of the shares that he already has in the business. Like, it's a lot of money. I could be wrong on the exact number there, but it is a ton of money. Okay. If they dilute, that hurts EPS and that hurts the per share dollar, like because the market cap will stay the same, or sorry, the outstanding shares will increase, the market cap will stay the same, and so the shares have to come down. So it puts pressure on the stock. So if they need to get to $35, if they need to get to $45 by March of 2026, okay, because it needs to sit there for 90 days on a weighted average to get to, by June, which is the sort of end date. Doing dilution here seems like suicide for their performance-based stock units. It seems like self-destruction. So it must be for a reason. Opportune acquisition, maybe. Potential, needing to raise capital for a massive influx of student loans, which they might be expecting. People don't realize how big SoFi is. Like new investors into SoFi see the amount of loans that they're dealing with on their student loan side and think, oh yeah, it's a smaller percentage of their business. But it's like 60 to sometimes 70% of the total private student loan refinancing market. Like, they own the private student loan market. SoFi does. JP Morgan, all these big banks, they don't even touch student loans. So it's great that SoFi entering into a space with an administration that potentially wants to offload some of that and not have the federal government deal with all of those loans. SoFi might be a prime pick to pick up a lot of those loans and start refinancing for big, for large education institutions. So maybe that's it. Maybe they're ramping up for a lot of capital to deal with an influx of student loans. Maybe it's a massive influx of home loans. That's what Chris Lapointe just said on their most recent fireside chat. Which honestly is a much bigger deal than people give it credit for. Home loans is a huge business, but it is extremely capital intensive. Okay, so they need a lot of capital. We thought that they had enough capital after they raised. So whenever people think, okay, they raised $1.5 billion. Okay, now they can go give out $1.5 billion worth of loans, but they just did $9 billion of originations. That's not that big of a raise, but that's not how it works. See, banks can offer more leverage than the amount of cash they actually have. And the quick math is about 9.5 times the amount of money that they actually have in cash, okay? Or risk-based assets. It doesn't even have to, it can be a cash equivalent as well. But essentially, for every, let me just do this math really quick. For this $1.5 billion, if we just saw this purely in just going into loans, they can essentially times this by 9.5x. So they can give out, after this $1.5 billion raise, an additional $14.25 billion in loans. That's what they just opened themselves up for. This is, and by the way, they have the ability to run that up to, an additional 15%, which is 17.25, or 1.725 billion. So here, is this going to look silly? There we go. Look how sweet that looks. Okay. So if we times this by 9.5 times, they can essentially lend out, in terms of originations, an additional $16.4 billion. Whoa, that does not look good. Okay. But if we end up, and it will be a full amount, they will take out the additional 15%. So this is really how much they raised. Like that's honestly how much they raised. But they've done this twice. They did this last quarter. So in the last 4 months or so, they have raised $3.45 billion. A lot of that is still in cash. So that means, we times this once again by 9.5 times, that they can take out an additional $32.775 billion in loans. That's an insane amount. Just to put it into perspective, SoFi's current loan book is $33.4 billion. So this doubles their loan book potential. And the only problem with this is, how fast can they do this? Okay. They can't do this all in one quarter. They can't just make one big shot of, hey, let's dump this all into new loans, because then, your underwriting's probably going to get sloppy. The new customers you take on are not going to be as vetted. Like that's not a good idea. So I think it's going to be a mix of a bunch of things if they don't go the acquisition route. And by the way, the acquisition route doesn't even, that's another thing I've been thinking about. That part doesn't even make 100% sense to me, because why don't you just go to the acquirer and offer them shares of stock? Why dilute now and then get the cash now for a potential acquisition, whenever you can just go to that company? Let's say it's a $1.5 billion company, or even a $2 billion company, and say, hey, we'll do 75% in stock and 25% in cash. That would look like the exact same deal, right? And, maybe even be at a better price whenever the deal actually gets done 3 months from now and the stock's much higher. So who knows? So that's the other part with the acquisition that I'm not 100% clicking with. Now, and by the way, I just scrolled my head really quick, and someone said, why am I not buying? I bought today. I bought SoFi shares today. Hey, Tanner, what if Noto is making a deal with Trump for yeah, no, it's definitely that was one of my possibilities for sure. It could be a big student loan increase, could be a big home loan increase. It could just be, hey, you know what? We've been calling with a bunch of loan platform businesses, and across the board, we're seeing personal loans, home loans, and student loans all hitting at the exact same time. And that we might not know exactly what to do with this money, but it's like the demand is 100% there, and we will fill it. I don't think that they would do that. Remember, Anthony Noto is more impacted from this than any of us. Not only does he have tens and tens, if not nearly $100 million worth of stock in this company, maybe one of you guys do as well, but then he also has performance-based stock units with an expiry date, right? Which essentially makes a massive portion of this business for him. So he has a lot to lose on this company. I need to check how much Anthony Noto has in this business right now, because I actually think I undercut him a little bit by saying 100 million. He definitely has more than that. He has 350 million. 350. Very easy to check if you guys have Fiscal AI. Go to the companies that you want. Go to ownership right here. That will, once I pull down chat here, show you the amount of shares the last time it was updated, and then the market value of all those shares today. So he's got $346 million. Derek White, who's actually left, has $30 million. Chris Lapointe has $14 million. Jeremy Rischel has $22.7 million. All of these guys have performance-based stock units. So, very, very big deal. I don't know, guys. I don't know. Tell me I'm crazy, but I very much trust management. The only part that I don't trust, and that this is true, is the next time that they come out and they say, who is, or are you guys going to need to sell more shares and raise more capital into the future? And if Anthony Noto says, no, we're well capitalized, we don't need to do that, I'm just not going to believe him. Doesn't mean that he is going to, but we are on our own if they are going to dilute or not. Like, completely. Reddit will get into the S&P 500 today. Hey, I've got share in them too. And I think that they are a good proponent to get in, but they're a very new public company as well. Okay, let's see. There's more dilution on the way, 15%. Well, I'm glad you know. Bucks knows in chat. But yeah. It won't be included today. Stop dreaming. Well, it's literally from the time that Robinhood went profitable and the time that SoFi has gone profitable. SoFi is off by one single quarter. I think that that's important to know. So if we don't get in now, it's a high chance that we, begin to potentially get in next year. But I'm still going to monitor if they get in today. Like, I'm not ruling it out. I'd probably put it at a 10 to 15%. Would I bet money on a 10 to 15% outcome? No. But there's no downside if we don't get in. There's only upside if we do. I don't like those, I don't mind those odds. S&P 500 decision is after close today. That's after the market is closed. Why are they so vague to why they're diluting? Well, that's why I think. So some people bash their thing. We're saying general corporate purposes and everything. What I think that highlights is that they are not looking at an acquisition, or at least it was good to know that it wasn't exclusively for an acquisition. I think that what that told us is that it is generally just for paying down warehouse facilities, growing the loan book. And by the way, all of that can be accretive. We're spending something like on the $2 billion that we pay 5.3% per year. What is that exactly? So we have a little over 2 billion. I think it's like 2.2 billion or something, but let's just say it's that's $100 million that we're paying out per year for warehouse facilities. So if they want to take this $1.5 billion and pay off warehouse facilities, that immediately is accretive to the bottom line. Like, if you save $100 million of debt and you continue to grow it the same way that you are, you're saving $100 million in net income. So there's a lot of flexibility that they have. We don't know 100% what they're going to use with it yet. Okay. Well, I mean, it would go straight to the bottom line. They're not going to, I don't think they're going to buy Bitcoin or Ethereum. They're not going to be a treasury. This is a fully regulated bank. They're not going to be speculative with that money other than the loans that they know that they can control. Okay. I believe Noto told the truth when he said that they were not going to dilute again. I believe another opportunity came up. I do not believe Noto is a liar. I don't think that he's, calling him a liar is such a strong term, because people think that he's being deceptive whenever what is he supposed to say? Is he supposed to come out and say, we are actually planning to dilute again? What does that do to the stock? That means that they're going to dilute at even lower prices. It honestly should just be a thing that he almost tells the reporters or the fireside chat people, like, hey, you cannot ask us if we're going to be diluting or not. We can't talk about it. We're a flexible financial institution. We don't want to give an answer. That would have been better if those types of questions just didn't come up. Yeah. Someone count how many times Tanner says, okay, if it was a drinking game, you guys would be dead. So don't count that. You guys will die. It's my filler word. I gotta have something. Other than treasuries like BMNR or Strategy, no other company states that they're going to be diluting. Nick, 100%. They're not going to come out and say that. but he kind of dug himself into a hole because they specifically said, no, we're well capitalized. And they are. That the funny thing is, they are. Like, they're so well capitalized. They have so much money to potentially give out more loans. They're at like the highest rate that they've been at since Q4 of 2022. And I don't just mean cash. I mean cash as a percentage of their total loan book. Sorry, I have missed some donations here. Mamba, thank you for the $28, brother. SanDisk for the portfolio. NAND memory will be supply constraint throughout 2026. Super important for data centers and many other use cases. SanDisk stands to benefit. Would love a deep dive on this from you at some point. I need to do a lot better on the memory names. I definitely do not know them very well. So it's definitely something that I do need to look into for sure. Thank you, Mamba. I really do appreciate that. Jonathan Price, more VRT into the community portfolio. Will do, man. Thank you. Really do appreciate that. Okay. SoFi will be sub 15, or SoFi was sub 15. I thought you said SoFi will be sub 15. Yeah, I know. The price holding up, the market is honestly giving SoFi so much benefit of the doubt because they realize this is like margins are only expecting to expand. They said they're going to be on the lower end of EPS, but that's still like 60 cents for next year. Maybe it's 68 cents, something like this, which is close to double what it was year over year. So you're talking about a company that's doubling EPS nearly. And then also growing top line, like 35+%. And then they go to raise. Everyone thinks that well, not everyone, I shouldn't say this, but there are some people who make very loud comments online that are saying this money is going into their pocket. That's not how it works. Like, Noto owns a sliver of this company. I am as much of an owner in this business, not as a percent share, but like he doesn't have founder shares. He doesn't have some exclusive right to just pay himself egregious amounts. We need an annual shareholder letter if he wants to pay himself $1 billion, and he needs my approval. Not mine exclusively, but ours as a community, right? As shareholders. This is not some big scam. Okay, fully regulated bank by the by the Fed, the OCC, and the SEC. There's not a company other than the other banks that they are with that are more regulated than SoFi. Like Apple, Meta, all these businesses, they can go about their lonesome way. They can create products. They can enter new markets whenever they want. SoFi literally has to ask to get into things like small business banking. Like, I mean, they're extremely regulated. Okay. Yeah, and we raised $3.4 billion on a company that's $33 billion total today. $3.4 billion, and the stock is, it is down 7%, but they diluted by 4.85%. So we're really down like, 2-something percent. There will be actually like they did dilute, so the price deserves to go down, right? But then the quality of the business that we have is $1.5 billion richer. So their balance sheet's going to look a lot stronger next quarter. Also, you can take a look at that through book value, for example. A lot of people like to look at financial institutions as what's the book value of those businesses? It skyrocketed last quarter, and it is going to skyrocket this quarter because of those cash balances. All right. But let me bring up this because I think that this is important. And then we can go on to some of the other topics of the day. I can still field any questions or whatever. And doesn't mean I have the answers, but I can give my opinion. Let's take a look at this because this is also... Oh, wait. Oops. I got to make sure it's not in dark mode. All right. This is SoFi's total risk-based capital. And this is what I mean by they're so well capitalized right now. What we are seeing here, if I expand it out a little bit, make it really visible, is this is essentially how much money that they can lend out, but there's a multiple on this. Okay, like I said, there's an additional 9.5 times essentially what they can lend out, and quarter over quarter, because of the big raise, they can give out a lot more money. But it's not just the raise that ended up happening quarter over quarter. They also grew the business. They made more money. People paid back their loans. They paid with interest. The company grew. So we had a 20% risk-based capital ratio. That can get cut in half and still be a legal rate. It's got to be above 10.5%. And to be honest, if they really want to look like a decent business, it shouldn't go much lower than 14%, maybe 12.5% at the lowest. But this brought us up to 20%. And then this raise, assuming that we rose by all the $1.7 billion, is going to raise to 25%. This is without any additional growth. I didn't factor in, my expectations for Q4, which is going to be the biggest quarter in company history. Like, the amount of growth here is just crazy. But alongside that, to get this growth, to double this number, essentially, we had to give up a decent amount, nearly 10% dilution, a little bit more than that. So it costs, I guess, but SoFi is in such an interesting position now. I wonder what they're going to do with all this money. But there is immediate things that we could do. Pay off warehouse facilities, grow loans. It's so interesting because, whenever I think about the amount of money that they could do with that $3.4 billion that they've just raised in the last couple of quarters, like I said, they could essentially 9.5x that and lend out another $32 billion. But the $33 billion that we currently have on our loan book, which is the total size of SoFi's book of loans, that's student loans, home loans, and personal loans that SoFi holds, in their bank account, okay? Those have repayments. People pay back. They pay with interest. They grow. They're cash flow positive. Not free cash. Don't get me started there. But they're a net income positive business, and they bring in more cash than they, give out. So, it would be so many originations in order for them to double their book, like a ton. And Austin, I honestly think I am starting to have these grandiose visions of SoFi. Maybe there's some part of this that needs to fund their SoFi USD. The dollars that you bring in obviously will be the part that backs the USD 1-to-1, but maybe they need startup capital for SoFi USD, and they're already seeing massive demand. I don't know. My brain goes to so many different areas. I'm not a SoFi insider, But I do think that Anthony Noto, by raising this much money, does have extreme visions for this company. That's the only way that I could see a reason to continue to do this. They are not being conservative. They see a growth on period. They are here to play. Opinions on Meta's spending cuts? I mean, a perfect idea. Who really is using the metaverse for them right now? And so some people fielded the questions of what company would they acquire? I've got no idea. It's not going to be Chime. I saw that one floated. Chime's a big business, $9 billion business. If you were to acquire them, I think they'd probably ask for something like $18 billion. SoFi's not in that realm. Maybe a merger one day. Maybe. But I would put that under 1% chance. Okay. Will they have auto recurring crypto purchases? For you as a customer, yeah, that's definitely going to be a a product that they end up rolling out, but they will not be buying crypto for their own book. Okay. Yeah, I actually don't know what, that's another thing. So SoFi and Robinhood partnering. I don't think they're going to partner in the way that people think they might partner. like coming together or having a merger or something like this. But the loan platform business is so interesting to me. And one of the things that I've always questioned is, when are they going to get into external loan platform business? Meaning going to a company like Robinhood, who has already shown a want or an appetite to get into loan referrals. What if SoFi goes to them and says, hey, we'll underwrite your loans for you and we'll sell them off to institutions that we already have relationships with? That could definitely be a thing. But also, they wouldn't even need that much capital to do that. So I'm not 100% sure what they need this money for. I reached out to Anthony Noto. I can say what my DM was. Hey, Anthony, hoping to get some perspective on the recent $1.5 billion raise. From the outside, SoFi looked very well capitalized, so I'm trying to get a better understanding for the need for this. I know you're even more impacted by the dilution than any of us, so you have my full support, but just wanted to learn more about the reasoning behind the move. He read the DM. He left me on read. So that's our level of relationship right now. Okay. Hood should just buy SoFi. They don't want a bank. They want to go international. They don't want approval to move very fast. I'm sure he's happy to have your support. I mean, yeah, he has said thank you just for, appreciating the company and covering it. But, I'm easily replaced. He is not. So I'm a pawn in the chess game, and even that is an over exaggeration. Chime up 2.5%. I've been talking about this. No one's appreciating the move that this company's been making. We literally bought in this candle, this wick, about $16.50 is whenever we went in. Okay. It's been a pretty good run. And I think that they're undervalued. I think that the next 6 months is going to be very determinative of their future. Q4 is looking to be a very big quarter, and then it's really on Q1. So Q4 doesn't need to be too big, but Q1 needs to blow everyone's socks off. Chime Core is coming online. They're seeing massive tax refunds expected. There's going to be a lot of spend, and that spend this time around is going to be mainly on Chime. Well, not mainly, but a much higher increase on Chime Card, which has a higher interchange fee, higher take rate. They make more money than the debit card that they're usually serving people. Pretty interesting name. Pretty interesting. Do you like New or Chime at this current valuation? For me, they sort of play two different timelines. Which one do I want to hold for 10 years? Nubank. Which one do I want to hold for the next year? Chime. Chime short term, New long term. Nubank is one of those companies that has just continuously grown into what might go into like just the retirement account. I have the utmost belief in management. Stock's down. You look at this chart; it doesn't look that great, but we have to put it into perspective of where we've been. Okay, we were buying in this range. Well, actually, that's not true. We were buying in this range. I was buying all the way up, but we're only going to keep going. That's my belief. There's literally zero belief to think otherwise. They're growing faster than all of their competitors. They're growing market share. They're taking over Latin America. I do like the financial sector. What's funny is I'm actually way heavier into artificial intelligence just because of one single name. My one single name in NVIDIA is larger than all of the positions that we've talked about, including every single one of my fintech names all added up together, my e-commerce names all added up together. My NVIDIA position's bigger than all of that. So my real belief is in NVIDIA, but I do like finance a lot, and fintech is sort of a way to get an innovator's approach on that name or on that space. Nasdaq's up 0.3%. The SPY is up 0.3% as well. Rubrik, we showed off this earnings yesterday. This company, man, I was saying, I'm like, yeah, if there was one cybersecurity name, like I'm really interested in this one, might be interested in CrowdStrike as well, but this is sort of the one that everyone's paying attention to. 25% up on the day. Now, I got to give credit to someone in my DMs. There was this, who was it? Wongatron. Wongatron ended up sending me this video of the CEO of Rubrik. Take a look at this. I mean, honestly, this was such a good call out. So at Wongatron on X, got to give him all the credit. If he's in chat, shout yourself out. But he showed off the CEO of Rubrik and just essentially said, man, this is day of earnings. And he's got this hard video of him walking into the building. Okay. He's not posting this on earnings day to show off bad numbers. And I was like, all right, you know what? You might have something there. And boy, oh boy, I hope he was heavy in that name because he's up 25%. Wongatron is. So congratulations, brother. That's freaking amazing. That was a very, very good call. Okay. Do you think you're emotionally attached to NVIDIA, Tanner? Won't that be a problem? I don't think I'm emotionally attached. I think I'm way more emotionally attached to Shopify than I am to NVIDIA. NVIDIA, I don't think is overvalued at all. I think it's criminally undervalued. I think that it will be the first $10 trillion business. Everything I'm seeing, like even the CUDA tile information that came out today, the essentially the biggest upgrade that they've made to CUDA since 2006. There's no stopping here. Like, I have full belief in that business. It's still founder-led. He's the longest running tech founder in the space, continues to run it. He's humble. I love everything about him. Sorry, I'm just talking about Jensen right there. But even then, they're growing at 60+% rates, accelerating growth. Margins are still accelerating, going back to 75% gross margins. I've got, it's not even an emotional play. That's just a financial play. Okay. If I ever trim NVIDIA, I need to get into VRT. Well, I did trim a little bit of NVIDIA recently in the last maybe 2 weeks or so. Maybe it was a little longer. Time seems to be flying. But to buy Nebius as we were pulling back on like that last sort of, tech correction. Very, am I bullish data centers? I mean, I don't think you can be bullish on NVIDIA if you're not bullish data centers. But yeah. Definitely. What's the next 100% stock, guys? I don't think myself or anyone in chat could give you the honest answer to that. But, we try to make educated bets as well as we can. And hopefully a lot of the next 100% stocks are in my portfolio. But I honestly don't know that to be true. Still buying BM&R? Yep, I still am. Haven't been buying too much this week, nearly as much as like a Meta or, Nebius or even SoFi now. At this case, I ended up buying SoFi, but I just joined. Is it a good time to buy SoFi now? I don't know your risk tolerance, but I bought today just because the dilution is going to make a 4.8% impact on the stock. That it should fall by that amount. But people are acting like we just diluted and got nothing in return, right? So for me, I trust management with my capital more than what they're doing, or like without it. So I think that this is going to yield them a lot more than 4.8% if they're willing to do this dilution. So I do think that this is a more cheap price than what we're used to paying for. Real Matt Money says, Twitch gang, what up? Real Matt Money on the Twitch. Good to have you, man. Okay. SoFi to $50 to $55 if it gets into the S&P 500 might happen fast. Yeah, I think that could be a great 12-month target. It's not going to get to 50 to 55, like let's say tonight if we get in, or even a couple weeks from now after the purchases. There's not a lot of S&P 500 companies that jump nearly 100% on that type of news, but it could run. Twitch should go out of business. I mean, I think they slowly are. I still don't think they've made $1, but I've made $1 on Twitch. And so I'm not making a corporate, like, I don't know if OpenAI will make any money, but I sure like their products. So as a user, I find it fine. When's the decision on the inclusion? Tonight after the bell. So I think I need to double check, but I think it's 5 o'clock. When's the exact time? Someone in chat can help me. I don't. Maybe it's like right after 4. I don't honestly remember. We followed it for Robinhood getting into earnings, and it was so funny. There was multiple quarters where I was live streaming and following, and then the quarter that they actually got in, I said, you know what? I'm going to stop going live. 5:15. Thank you. I said, I'm going to stop going live. I'm going to go drive down to my buddy's cottage. And, if it plays, I'll listen to it over over Bluetooth or whatever and just listen to them get in. And was packing up the car and everything. We're going. And then they get in. And I was like, oh my God. The one time I didn't stream, Robinhood got in. And I'm not streaming this time for SoFi. Yeah. So who knows if you guys are superstitious. Okay. The ads on Twitch turned me away. I was a Twitch fanatic for years, and now I barely tune in over there. You know what it is? It's creator-based. So I don't think Twitch allows me to select if I'm putting on ads or not, but YouTube does. YouTube would love me to cover this in ads as well, but I don't run any ads. I think it runs an automatic ad in the beginning of the stream, but then after that, I run no mid-roll ads. So, but that's sort of creator discretion, I guess. Okay. You might need to drive down to your buddy's cabin again. I'm a little stitious. Yeah. I'm a little stitious. Okay. Can we talk a little Netflix here? What's going on with this name? They're buying Warner Brothers Discovery, which, funnily enough, people were talking about this on a midstream as well. They are or Anthony Noto is on the board of directors for Warner Brothers Discovery. That happened this year, like probably in April or something. Very funny that that sort of coincidence happened. Okay. That being said, let's talk about Netflix. To me, I don't like this deal. I could be wrong. Okay. For example, like if Robinhood, because they've had great acquisitions, they've acquired a piece of technology like X1, which was their credit card business, or Bitstamp, which is their crypto institutional exchange. And then they can use the tools at that business. Not only are they bringing in customers themselves, but then they use those tools to sell to their, other 27 million customers. But on Warner Brothers Discovery, not only did they pay a premium, and I could be wrong on this. This is not a name I follow very closely, but this is just the way I'm thinking about it. And you guys tell me if I'm wrong. There's obviously a large swath of customers at Netflix, but then a smaller, but still, decent sized portion of users at HBO Max that they're also trying to acquire. And they said, okay, well, we'll put this under one roof. But doesn't that mean that there's no cross sell there? The people who are going to be absorbed at HBO Max, maybe they have to pay a slightly higher fee or something I don't know what HBO Max's price is, but maybe they have to pay a slightly higher subscription fee at Netflix. But a lot of those are just going to get absorbed. And then the amount of customers, this is also something I know is true. There's a lot of customers who are signed up for both. Are they just going to need to pay one fee? Like you're actually potentially, it's like the opposite of cross-sell. You're almost bundling and losing sales. So I thought that was really weird. Like people don't really have to pick a team. I know people that have Disney, Netflix, HBO Max, all of these things. Warner Brothers is well worth the IP value though. But it's not even like people are paying for those, like it's subscription based. So it's a matter of, is the IP that you're bringing on going to bring on that many new users or increase retention by so much more? You're not actually getting like the way that Disney buys IP and then they run movies and sell product and set up massive theme parks. And I know Netflix does want to get into those things, but that's still very nascent, right? I just wonder how much it's actually going to impact their subscription revenue by getting like, are there people seriously waiting to like, they're like, nah, I'm not buying Netflix, like Stranger Things, all these other things, like whatever. But whenever they get Harry Potter, I'm all in. Is there $82 billion worth of those people out there? Okay. And by the way, I don't even think that my take here is all that contrarian. The stock's down. Like, people are saying yes. And by the way, I'm a huge Harry Potter fan. I love the DC universe. I'm sure there's a lot of things that I would love at HBO Max. Like as a customer, I'm super excited, but as a shareholder, I'd be like, doesn't it scare you that there's a company needs to shill out $82 billion to keep their business alive? Not even a lot. Sorry, I shouldn't say that, but like that they felt like they needed to do this. That scares the crap out of me. Game of Thrones, Harry Potter, all those things. I can't wait to, as a customer, to start getting into. I love that. Netflix subscription prices increased 30 to 40% over the last 5 years. They will raise prices substantially with minimal subscription loss over the coming years with Warner Brothers content. I don't know if you know that. Substantially because of more content? Like, you don't think that there's a percentage of their customers that just like will say like, hey, you know what? I can't pay $30. I can't pay $40 just for content. Like YouTube is still a thing. Mr. Beast is throwing out the greatest content of all time. He's doing it for free. Unless they have like really, really big ad supported tiers, which I know have done very well for them. But I think that they might have to start getting into that even more to support raising fees while also not charging their users more, just like taking more of their time, which absolutely could be the truth. That the more I think about it, that makes a lot more sense. If they get way more into their ad tier, it's a way to increase the cost. Well, it's worth $30 if Harry Potter, DC, anime, and K-drama come in. What? It's worth all that if all this old stuff that we've already regurgitated and like watched 1,000 times come on. Like, I'm probably going to get canceled for saying this, but like, I actually, you know what? I'm not going to say it. But there's other ways to get movies, to watch those things, that is not paying a subscription to watch a movie one time that you're going to watch in the next 5 years. Bro, I've rewatched Friends, Seinfeld, many. No. I agree with you, but I wouldn't pay more for that privilege. I could be wrong. Some people. Okay. Say. I'm not anti anime, or I don't watch any of it, but like I'm not I wasn't scoffing at the choice of media. Like whatever's popular, I think is popular. Um, but it's a matter of if you're going to pay for it. Okay. But they would if they have more content. I'll pay for a subscription to see new Joker Batman. You guys need to go to the movies more. Pay a monthly fee to go see a movie. I don't know. That's my only problem with Netflix. Obviously, they've done extremely well, but I've just never been able to wrap my head around Netflix because I'm like, they're just going to have to keep paying more and more and more to attract more users, and eventually, like there is a price. Sound like Ronald Reagan here or something like that. There is a price we will not pay. There is a point beyond which they must not advance. But no, Netflix is just, it's a cool name. I'm a customer. It's not a shareholder. Robinhood down 3.7%. Wow, still at 132 though. That's pretty good. Netflix got anime and K-dramas on lockdown, very popular worldwide. I'm a buyer. Data shows that everyone watches Netflix and YouTube. Other media is not really watched at significant levels. No, but doesn't that make you realize that people are not willing to pay for HBO Max just to get Harry Potter? Doesn't that prove what I'm saying? Like people are not willing to pay for some of this other IP. I have not seen Vlad on the Compound. I did hear that it was a thing, but yeah. I'm not anti-anime. I'm just never tried it or whatever. I just don't like it, to be honest. I'm not even going to try to defend myself. It's just not for me. Sentinel 1 down 30. Isn't that crazy, by the way? Oh, well, SoFi is lower, which is SoFi's 2x leverage fund, but Sentinel 1 down 13%. Cybersecurity name. Rubrik up 24%. These names are not made equal. These are not created equal. SoFi down 6.67%. It's actually had a pretty good recovery. I mean, the fact that you could have got this under $27 today, like that reaction was extremely strong to news that I think just strengthened the business. But we'll have a show tonight as well with all the boys, the Fintech Fintech Friday show, to hear if this is an investable business now. Because I think Roy is going to be, last time he was pissed. Two dilutions in a row, he is going to be livid. I'm excited to hear what he has to say. Oh, I don't know. Can we talk about ETH and BMNR? Yeah, actually, there was news in my little notebook here that I wanted to talk about. Okay. Look on Chain. If you guys don't know, this is the place to look. They have been spot on with the wallets that they've addressed as being BMNRs. Okay. They're like, yeah, anyway, they've been doing this and for a lot of not just BMNRs purchases, but a lot of very big whales, and they track all of it. But another $130 million, which is now making this week like one of the larger weeks that we've seen. Okay, and we still have more days. The interesting part about crypto is that it runs, through the weekends. Now, this was on December 4th, another 41,000 or nearly 42,000 Ethereum And that was on top of the additional 46,000 that they purchased recently, making this one of the higher months in the recent history. If they purchased anything on Wednesday or Friday, Saturday, Sunday that was not tracked previously, we could end up starting to see a re-acceleration of Ethereum purchases by Tom Lee. If that's the case, is he calling for a bottom? They have new Tom DeMark Analytics platform, or DeMark Analytics, which has been, according to Tom Lee, spot on at depicting the price action of Bitcoin and Ethereum. He said that they were spot on whenever it comes to crypto markets. His words. Okay. Throw my leg up here. Okay. Roy was surprisingly positive about the dilution. Really? He doesn't really care. Yeah, I guess if you get beat over the head enough times, you're like, I mean, now I'm just sticking around for the kids. Did you see Tom Lee's clip saying crypto has bottomed? Maybe. If this is very recent, maybe not, but yeah. Okay. He's a PayPal holder. I don't think that changes anything. That's the opposite of dilution. Tom Lee's Bitcoin 200,000 by end of year. Hey, he still could be right. He still could be right. All right. CleanSpark down 8.5%. FG Nexus, which is another treasury, they're down 8.4%. Galaxy Digital down 6.8%. Look at this. Oklo, Rigetti, BMNR down. All the names that we saw running yesterday, the sort of meme-ish names or retail favorites, all down today. Open Door down 4.4. New Scale Power down to 2185, down 4.4%. Man, it just, the market is so volatile right now. What's the VIX at? VIX is actually down. VIX has just been falling and falling and falling throughout the week. That's pretty interesting. Measuring volatility, by the way. Let's see the fear and greed, and then I'm going to check the chance of a rate cut right now, 87.2%. Kevin Hassett says that he does not believe that, or he believes that the current Fed is going to cut rates on December 10th, 25 bips. I also hope that that is the case. Fear and greed index is now being placed at 41. We're about to go into neutral territory here in a minute, which I think starts at 45. So we're about to be out of fear. All right, not bad. All right. Unless you've been adding in high 20s, SoFi's dilution is pretty much meaningless. I don't know if it works like that. Like everyone has a total amount of outstanding shares, and that total amount of outstanding shares has lowered your ownership in the business. So I don't think it just affects when you've purchased. New bank just keeps falling. Okay, come on. Do we need to go look at the thing again? We're down 4.4%. It's 1686. If we looked a week ago, that would have been an all-time high. We'll be okay. Weak market for December? Honestly, I think we're seeing quite the opposite. It was the November was kind of the shakeout, but no, it's looking better. Did we talk about Rubrik yet? I don't have much to say about Rubrik, to be honest. I don't follow the name, but it is definitely spectacular to see the growth that the market is sort of attributing to the numbers that they put up. It definitely was a outstanding beat from what I'm seeing. Their cloud ARR, I think, was up like 53%. Like, oh, they're killing it. And there's been a lot of people that have told me to get into that name, and I never did. And to be honest, whenever they told me to get into it, it was like $100 stock. So I still have the opportunity to get in at cheaper prices, but I'm not going to buy something I don't know. Okay. Where do you think the SPY will end at? I don't really have an opinion on a 1 month run. I do think that we're going to have some form of a Santa Claus rally. You know, I still believe in a rate cut. That's going to be good for the stock. Okay. I like Rubrik, but I don't have any. Oh, sorry, my chat is not up. My bad. Sorry to the Twitch audience. I didn't let you guys see what some of the other crowds were saying. Some of the other crowd. It's one other. It's YouTube where everyone is, and then 5 people are hanging out in Twitch, and that's it. But still appreciate it. Nebius. Let's check Nebius really quick, and then I want to get into some of the videos of the day to learn little bit with you guys. Down 5.5% on Nebius, $97. Still looks good. Okay, let's go ahead and check out some clips that have been happening on CNBC. A lot of them about the Netflix deal, so I want to check that out as well. Nothing I don't think I've seen on SoFi. Was there any talk on SoFi? Josh Brown talking about his best stocks to buy right now. He was literally on yesterday, I think. How the Mag 7 is still, in like ultra purchase territory. Jonathan, bro, thank you so much. There's a ton of members on this stream now. An additional 10 have been gifted by Jonathan Price. That's extremely kind of you. Oh, Josh Brown did a good interview with Vlad. Yeah, I need to check that out. Yeah, that's seriously kind, man. Jonathan's been like one of the larger supporters on the channel. So if you do get a subscription or a membership from him, please say thank you.
I'm the best stocks in the market list. The spotlight shining brightly today on AME, better known as Josh.
Amatec. This is a 95-year-old company founded in Pennsylvania in 1930, came public in 1984. Stock has been wrestling with this $200 level since November of 2024. It's been a full year of digestion. If you pull this chart back, please do this for me, Vin. Let me see 10 years. I want to show people the long-term trend, and then we'll come back to this because it's really important. These stocks that are making components for industrial, for medical, for electricity generation, for power, aerospace and defense, there's probably like 50 of these things running around, and very few people know them by name. They haven't been popular stocks, but they have all undergone a once-in-a-generation re-rating because of how important they are to all of this onshoring activity and the AI CapEx. Look at this trend. My God. All right, now give me the moving averages. So once upon a time this summer in June, I brought a stock to the air called Amphenol, best stock in the market. It was 90.
Do you guys even remotely care about this? Because I've already lost interest. I think we move on from this one. Let me know if you guys want me to go back. I can bring it back, but Josh Brown's great. But I don't care for that specific segment. Okay, let's hear about this on the Netflix deal. see if potentially the Warner Brothers Netflix deal is going to destroy Hollywood.
This morning is Matt Stoller, Research Director for the American Economic Liberties Project. Matt, it's good to see you. Thanks for joining us today.
Hey, thanks for having me.
Your piece doesn't mess around. You call it an illegal deal. You say the ideal scenario is a trial that puts some Hollywood executives and filmmakers or financiers on display.
Yeah, that's right. I think that Hollywood's a great national security asset. It's a great thing for America, and it's been suffering for a long time because of consolidation. It'd be nice to just actually get to know what the details are, the thinking behind the people doing that, and so that we can reorganize it and make it work better.
You think the problem is the process or the potential outcome?
Well, I think the problem is longstanding. It's consolidation. Right? We need more movie studios. We need more open markets, not fewer.
So what's your concern here? Is it that they're going to kill movie theaters? Is that it's going to make it harder for the talent and content creators to compete? Who suffers?
Well, ultimately, it will destroy Hollywood, right? So that's what we've been seeing. So the number of movies is going down, but also you're starting to see a lot more foreign content coming in, and you're seeing a lot less upside and leverage for creatives. And ultimately, if
you're seeing a lot more what type of content come in? I don't understand. Like, this doesn't even make any sense to me. Obviously, he's saying, more studios, the better. I get that. But it's not like they're not having actors on these shows. Like, there's still actors. Oh, foreign actors. Okay. I got you. Okay.
people don't get paid for their work, they stop doing the work. And that's what we're seeing. The fundamental problem with what's going on in Hollywood right now is that the price signaling function has broken down. So if people like something, it used to be that they would pay for it and studios would say, oh, we'll make more of that. But now with the attempt to vertically integrate these streaming giants, there's no price signaling anymore. So people don't know what to make that consumers will like.
That sort of explains, I guess, historically, the buckshot nature of Netflix content creation is you kind of make a little bit of everything and just see what sticks.
Yeah, but people aren't paying for anything in particular. It's not like they're going to the theater or they're renting a movie or something like that. What they're doing is they're buying a bundle and they're hoping, maybe I'll watch this, maybe I'll watch that. And that fundamentally destroys the price signaling function that used to make Hollywood work. And we had rules, the financial syndication rules. We had Paramount decrees that said, look, we're going to separate out distributors and the people that make things, that we can have open markets so those price signals work. And that's why we had this wonderful jewel of creative expression called Hollywood that was also very profitable. When you take those signals away and then you say we're going to consolidate everything, then everything turns into, Marvel Universe and just kind of like the slot that we're getting with higher prices and worse outcomes for everyone involved, and ultimately the destruction of the industry.
Joining us
I
this
missed
morning
the last part of that, but I don't think I agree at all. What did he say at the end? I had to step out for a sec. I don't even remotely agree. Like, we have to, why isn't he up here talking about artificial intelligence is going to destroy Hollywood? There's a way bigger worry about generative AI taking jobs in the film space and taking away animation jobs than Netflix acquiring Warner Brothers. They still need to create more content. Okay. AI video generating is better. Yeah, I know, but AI is not, or Netflix is not like stopping Warner Brothers from doing that. To me, this, am I missing a big piece here? To me, this just seems like an obvious, they think that this IP is on a discount. They're going to buy the IP and then, potentially start to branch out into being more of like a Disney-esque business of more merchandise, more physical product, more theme parks, more of those types of destinations. To me, is this like an anti-Hollywood play? That's the first I'm hearing about it. Yeah, like Disney. Okay, then Yeah. Nick H, becoming a member of the channel. Thank you so much. Welcome to the cult, my friend. I need to change the name. We are a cult, okay? I need people to realize that. Oh, no, we're not a cult, you know? No, we are. They've already opened a Netflix building. Yeah, I have heard of some things, some new physical products, stuff like that. Cultish investing. My first cult. That's funny. Okay. I want to hear more about this Netflix. I didn't realize there was such a big fuss. Well, also, like, consolidation of one industry is a problem. Like, this whole idea of, like, oh no, it stops people from going to the movie theaters and stuff like this. It's like, it's not a what? Like, what happened to Netflix stopped people from going to Blockbuster. What happened to Blockbuster culture? It's because it was worse. I like going to the movie theaters, but versus the price of a month of unlimited streamed movies that I want for the same price of going to the movie theaters once, getting upcharged popcorn legitimately has like the highest upcharge that you can possibly have. What's going on there? Oh, let's hear this. This is going to be great. Okay.
Meanwhile, the big story of the day, Netflix winning the bid to acquire Warner Brothers. Our next guest arguing against the deal, saying it poses an unprecedented threat to the industry, adding that theaters will close, communities will suffer, and jobs will be lost. Let's bring in Cinema United CEO Michael O'Leary for more. It's great to have you with your reaction here, Michael. So what are you guys going to do about it? Are you going to file a complaint with the regulators?
Certainly, we're going to thank you, first of all, for having me this morning. This is a very important issue for our industry. And we're going to be pulling all of the levers we can, because we think that a deal of this magnitude with the potential impact it will have is something that everyone with regulatory and oversight authority needs to look closely at. So we've already been talking to people at the federal level, at the state level, and internationally, because this is a significant threat, we believe, to the long-term viability of theatrical exhibition.
Why? Is it your expectation that once Netflix does this, that we won't see theatrical releases anymore?
What are they talking about? Both of these companies existed before. Now they're just coming together. How does this change anything? As if this is actually potentially less competitive to the movie theater industry. What are they talking about? And anyway, an industry does not deserve to be alive. You have to, is this a nationally secured business where movie theaters have to be government supported? Oh, we're going to go talk to regulators because I have 10 employees that run this massive facility. If honestly, where I see a lot of movie theaters going, which is still very, very cool, is things like live viewing of events and stuff like this. Like, hey, we have this massive event, but we also have these viewing parties over here. Like, hey, maybe that's cool. I can go meet up with other people. We can actually, talk while the event's on. We don't all have to sit quietly and try to hold our bladder because we can't pause the movie while it's going on. And then you have to shuffle excuse me. You're stepping on soda and everything because the teenager that works there didn't mop the floors after 5-year-old spilt an entire large Coca-Cola on the ground. It's not a great experience. People want to act like, oh no, dude, I love standing in lines waiting for a movie. Netflix is way better, and the better product at the better price and the better, just deliverability will win. That is capitalism. Not, oh, I have employees, so my company needs to stay alive. You know what Netflix should do? Offer those kids a business to go work at their next theme park whenever they start that up. We do need NVIDIA earnings calls in the theater. That is true. Theaters are dinosaurs looking for an excuse. 100%. 100%. Like where was Blockbuster saying that Netflix is taking their jobs? Businesses don't deserve to be alive. You have to innovate. And if they want to innovate by saying, hey, we're going to make these personalized rooms, and which they are doing now, where the seats are much more comfortable, we'll bring you food to your table. Do you want some alcohol? Something like that. Like there is fun experiences. But that's how they stay alive. They don't just regulate themselves into existence. Those are the worst possible investments. Well, actually, they're good for the companies, but I don't believe in that strategy at all.
We won't see the box office anymore. They'll just release it on their streaming platform.
I think if you look historically, when legacy studios are absorbed by other entities, even in the case where those other entities are also legacy studios, the amount of movies produced for theatrical distribution goes down. In this case, it's particularly problematic because the party acquiring Warner Brothers in this case has, that's not what they do. They focus on television, and they have been consistent in saying that they're not interested in theatrical exhibition. So if you're looking at it from the perspective of exhibition, just a few short years ago, 20th Century Fox went away, resulting in a 46% decrease in the number of titles that were coming out of that studio. You layer on top of that the potential that the Warner Brothers catalog will no longer be available or no longer be available in a meaningful way to theaters, and it's just impossible for the industry to absorb that kind of loss in such a short time.
Joining us this
All right. Yeah, I don't know. Netflix can get innovated away too. People are acting like that's not a possibility. Their ability to stay alive is if they can create more content. It's a subscription business. Netflix doesn't deserve to win either. Jimmy Beast, Mr. Beast, is putting out movie-like videos weekly for free viewing, supported by advertisements, where you don't have the extreme high costs of a movie theater and don't even have the high costs of a Netflix. So Netflix is being innovated away as well. Everyone has to compete. So, yeah. That's the thing, too. Even if you see like stand-up specials and stuff, which Netflix, for the most part, has dominated. They've been sort of really in the stand-up space. There's been a couple, Shane Gillis, live in Austin, Ari Shaffir. I don't know if I can even say the name of his special. I think I can, but anyway, it's Jew. Is the name of his special is Jew. But all those things got released directly to YouTube. You don't think Netflix offered them a big bill to put it on Netflix? Of course they did, but they said, hey, you know what? My community will watch this more than what you're offering to pay me, and so we'll release it to YouTube. That's innovation. That's, pricing competition. Tanner, would you buy Netflix? I'm not buying Netflix here. I don't really use it. I pay for it, which is maybe that's a good sign that it's a great business. They've got some good IP. I love Stranger Things. I love some of those pieces of content. I'm staying up to date. I'm hip. But yeah. Tanner, what happened to SoFi? Can you summarize it? I made a video that summarized what happened, and then sort of maybe the first 20 or so minutes of this stream, I gave you guys my full breakdown of what I think can happen, went more into the numbers. So a little rewind might end up getting you there. Okay. I'm on the last season before I start the latest. Okay, well, I won't spoil anything then. The new episodes kind of suck. Okay, so I actually like them. They're fine. But I think we're sort of in this uncanny valley where things are starting to look a little like they're more realistic now, but they're also looking a little weird. And the movement's kind of weird on some of the more CGI, maybe even AI generated stuff. So it just looks a little interesting. You're not hip, you're gay. Okay. All right. No spoilers. No spoilers. Samsung just announced a triple fold phone. I don't know if I like that idea. They can keep doing these gimmicks. I don't think, like, do you guys even like any of the folds at all? Any of them? I like a standard flat phone. Okay. No, I like a flat phone. Folds into an airplane. Dude, my phone's big enough. Like, people say, like, oh, you know what? I'd love to unfold it and make it into an iPad. It's like, my phone's big enough. It's huge. Tom Lee, can we watch? Is it live? Is he live? Where? Tom Lee live where? Okay. Tim Lee. Where's Tom Lee? That is not Tom Lee. That's someone else. Where is Tom Lee? Someone is talking about strategy right now, if you guys follow that name, but okay. Okay, you guys are funny. Let's jump into Boston Dynamics CEO says they're working with Secretary Lutnick on a national robotics strategy. Where's Tesla today? Tesla flat. What's the main robotics play? Like, for me, if I'm thinking robotics, all I'm thinking about is Tesla or maybe even NVIDIA. Okay. The federal government reduced the federal student loan cap for students, which takes into effect July 2026. Yes. It's not by much, though. It's not like they, really gutted it, but it definitely did get cut. Amazon's the big robotics name. That's a very good one. NVIDIA and AMD. Humanoid robotics still very far away from reality. That might be true. Teradyne. There was a report actually that came out that people were writing on. I think it was Morgan Stanley, maybe. That said Google might have to wait to ramp up TPU output as TSMC's CoWoS packaging, advanced packaging, won't substantially increase until 2027. People are putting this as sort of a massive green flag for names like AMD and especially NVIDIA, who already have, these large contracts with NVIDIA. It's crazy how these big bear cases can come in, like Google's TPUs, take down and just kill. Oh, wait, hold on. Look at this. Dude, SoFi is running, man. This is another product update. We're taking in your feedback. We're listening. And our financial insights tool got an upgrade. Better categorization, month-over-month spending trends, new filter options. These look great. That looks fantastic. Restaurant, bars, groceries, coffee shops, liquor stores, other food and drink, banking fees, housing and utility, insurance. That's phenomenal. It's not a revenue generator, but it will keep customers long term, and especially the right customers. Okay, the people who like their vaulted products and their credit cards and their spending tools are, customers for a very long time. They're looking for their student loan balances to have lower fees. They're looking to get into their first home with a mortgage from SoFi. But it's the cadence of upgrades that I'm seeing. I celebrate every time Robinhood gets an upgrade. I'm going to celebrate every time SoFi gets an upgrade. This is an upgrade. Okay? Not everything that they do is going to be the next loan platform business or a smart card or something like this. Sometimes we just need to work on the UI and just advance those products just a little bit further. It's the 5th, so we'll know by next week how the website traffic is doing. And then I'd probably need to reach out to my plug and get the app traffic. I may or may not have someone that works at that company, which I will no longer name because I don't want them to pull down my videos for using their proprietary data. Tanner, are rate cuts already priced into the market, do you reckon? Well, I think a percentage is, but whenever there's something like 13% chance of no rate cuts, then you have to sort of assume that there's, a 13% additional, not upside, because it's not going to be in dollars, but I'd say about 87% is priced into it, because that's literally what the market is assuming. It's definitely not the SoFi Insider. We don't talk. Okay. What else? What are you guys saying? Meta purchased Limitless, a wearable company. Dude, you know what's so funny? I literally have that up on my screen here, and I didn't even realize that. I just looked over at my screen. It was already open. Meta acquires AI wearable startup Limitless AI. But dude, I like this idea. Not for, I don't like the pendants, like the AI pendants and stuff, but you get into a nice watch and glasses, that can solve a lot of issues. I like that a lot. Meta phones. Would you guys buy a Meta phone? I definitely would not. Not at the start. Like it took Google a while to get a good phone product. And I was there along the way. I had the Nexus 5 and then a bunch of the Pixels and stuff. I actually think I might have had an even earlier Nexus product than that. But I don't know if it would be any good versus the big flagship players. Discrete recording device is just what Meta needs. Yeah. That is the problem, right, with Meta is you offer these types of products and the immediate reaction without us knowing the features, because we can change our mind very quick if the products are so much better than the alternatives. But the immediate reaction is, oh, wait, the really scummy data collection company wants to give me a hardware device? No, thank you. But if they end up putting out something that's amazing, then people will go, you know what, I can get over it. Like Google. Google is, I think a lot of people just think, hey, this is a company that just collects all this data on me. But have you guys seen the Pixel? It's phenomenal. So yeah, I'll buy it. So Google consumer hardware is crap. I literally think the opposite. I think they have the best phone on the market. It's, in my opinion, is way better than the iPhone. It's way better than Samsung. I think the Google Pixel is leading the charge right now. I'm going to get a lot of flack for that. I'm aware. A bunch of iPhone people coming out and going, hey, we just got a bunch of upgrades for our phones so then we can have this sort of assistant that picks up our phone for us. Guys, we've had that for years, okay? You're just catching on. Pixel user since Pixel 2. And you know what? The Pixel users never switch off. I switched off and I wanted to be back immediately. This thing sucks. My next phone's definitely going to be a Pixel. I hated the fact that I switched off. Splish splash. That opinion is trash. All right, Steve, I apologize. Okay, long-time Apple shareholder. The iPhone, if you're an iPhone person, you're on the Apple ecosystem. I'm not saying the iPhone's bad, but the Samsung is bad. I prefer, if you're saying Android to Android, Pixel wins. It's the smartest phone in the world. iPhones are very popular here in Canada. I'm definitely in the minority. My girlfriend is an iPhone user. She'll never switch. I'll never switch to iPhone. Our bubbles will never be the same color. But hey, I can't help if she has bad taste. Clearly. Okay. Let's get back to the markets. The iPhone cult is crazy. I'm literally watching like the view count fall. People are like, not my iPhone. I'm watching on an iPhone. I'm just having some fun. I'm aware it's a good product. Like the world runs on Apple. I get it. I'm just having some fun. You're allowed to punch up, okay? It's okay to punch up. You're not allowed to punch down. So just realize I'm on the losing foot here. I'm just trying, I got to make myself feel good because I'm not on the Apple ecosystem. And because I join a better product. But I heard future investing is getting bought out by SoFi. Is there any truth to those rumors? Yeah, 1.5 billion actually. He's raising that money for future investing. Okay. Nothing brand is more. Oh, Nothing brand. Yeah. Nothing is all right. Maybe Meta should look to acquire Nothing, which is the name of a phone brand that has been making waves for like really tech forward people, making these like transparent phones that are really spec heavy. The company name's literally Nothing. It's confusing, but do I use Google Fi? No, I don't think it's in my area. I don't think it's a Canadian thing. Yeah, S&P 500 announcement is later today. 5:15. 5:15. Okay. Let's see what else we have on the list. Valuation reset is the big story for next year. Some sectors are seeing a jump in hiring after a very soft year. Let's see this valuation reset thing. Maybe this can make me feel bad about my purchases recently. Oops, here we go.
Savita Subramanian is head of equity and quant strategy at BofA Securities. Savita, it's great to see you. Welcome.
Great to see you, Kelly. Thanks for having me.
Give us some pause in all the happy talk lately. Everyone's like, we're going to broaden, and the industrials and the financials and the small caps, you see it differently.
Well, look, I think we are going to broaden. I just don't know how it's going to go for the ballast of the S&P 500, which are these mega cap tech companies. And I suppose I worry a little bit about potential downside risk for the biggest companies in the S&P 500, just given that we're at this sort of an air pocket in terms of AI, power, et cetera. So that's where I see the risks in the months or the year ahead.
In more specifically, do you think that the mega cap tech trade becomes challenged, or is it kind of up and down across indices? You mentioned some of the power companies.
Yeah, so I think here's the problem. If we're buying these companies, we're paying peak multiples or close to peak multiples for a lot of these tech companies that are building out power and building out the data centers that are needed to power up all of these chips and do this awesome stuff. And, at this point, we don't even know what we're going to get. And we're probably not going to see real monetization in 2026, right? Because power is the bottleneck. And it takes a while to get everything up and running. So, what worries me is like right now we are essentially buying the dream. We're buying the expectations that AI is going to be a massive game changer in terms of efficiency, which is likely. But then on the flip side of that, I wonder about the consumer, because if AI is really transformative, what happens to all the jobs that it takes away? What new jobs are created by AI? So, I kind of see us in this period for the next 12 months where we're spending, we're paying a high multiple for growth stocks, but we don't exactly know how this all plays out, over the next few years.
I was struck though, you're very much with consensus, and this is one area of interest where earnings forecasts are coming up, and you've got 14% earnings growth for next year, $310 a share. So you're not saying we're going to hit an earnings problem. You just think there's going to be a valuation reset for big tech.
I do. I think the valuation reset is the big story for next year. And actually you've had, historically, if you look at years of really strong earnings growth, you haven't necessarily seen the strongest market gains. In fact, you've more often seen multiple compression than expansion during years of really healthy earnings growth. So I'm not as worried about earnings unless we really see consumption start to falter. But what I am worried about is the level of expectations that we've got for these growth stocks that may not kind of come to fruition over the next 12 months or so.
What would your ideal positioning look like then for people who go, I feel the same way?
Yeah, we've got a very out of consensus outlook on the consumer. So I actually think it's time to add exposure to consumer staples, maybe add exposure to that lower price discount retail cohort of the market, because I think that a lot of that pain in the lower income consumer might actually be solved in the months or year ahead. And I know, and nobody.
No,
really...
I wanted to write about this for Monday, so I'm like, give me all your data. Because here's what I'm hearing: they're saying the tax refunds are going to be higher.
Tax refunds,
saying,
right?
Give me all the data points. Why do you think the consumer could actually have a brighter outlook?
Yeah, Kelly, I'm going to lay it out for you. So I think we're 12 months less than 12 months away from the midterm elections. The current administration is trying to solve the inflation problem, and I think that's where you're seeing the talk of checks being written, the talk of stimulus. We've already seen some disinflationary pressures in oil, gas. I think that utilities are going to be regulated. Utilities could be negotiated lower for that lower income cohort that has been feeling a lot more pain and struggle in this economic recovery, so to speak, that we've had. So I think that from a policy perspective, the timing is now, where you start to see more solutions for that lower income inflation risk. When you think about middle and upper income, the bigger draws on the wallet of middle and upper income are, food away from home versus food at home, insurance versus utilities. And those are areas where we don't necessarily see a stall in terms of that inflation pressure. So here we are at a point where we're starting to see disinflationary pressures in the wallet components of lower income. We've got an administration that is really trying to solve the inflation problem. And I think that's where you really want to kind of dive in. These are stocks that are discounting very, very low expectations. They haven't worked for a long time. So I think it's time to take a contrarian stance.
I wanted to talk about this Meta announcement really quick because I've just been looking into this company. They sell a pendant, which back in April, they talked about how they exceeded 10,000 orders, which can be, worn as a pendant here, as you can see. And they have a website that I don't like the pendant idea, man. I don't. I don't understand even the point of that. They must be acquiring them for the software or something, because like that's what the glasses are for. You know, why would you need a pendant and glasses? But Limitless was acquired by Meta. Let's just listen to this video, which I assume is from the CEO here.
I'm excited to share that Limitless has been acquired by Meta. I'm going to share why we joined forces, what this means for customers, and what comes next. First, why? When we started Limitless 5 years ago, the world was very different. AI was a pipe dream to many. Hardware startups were considered unfundable, and a business that did both AI and hardware would have been considered ludicrous. But today is different. The world has changed. We're no longer working on a weird fringe idea. We're building a future that now seems inevitable. We're not alone. Meta recently announced a new vision to bring personal superintelligence to everyone. And a key part of that vision is building incredible AI-enabled wearables. We share this vision, and we'll be joining Meta to help bring our shared vision to life. What does this mean for existing customers? Good news. We will continue to support existing pendant customers for at least another year, but we'll no longer sell the pendant to new customers. You'll no longer need to pay a subscription, and existing customers get the unlimited plan for free. That said, we will be sunsetting non-pendant functionality like Rewind, and there'll be updates to regional availability. For continuing customers, you will need to agree to our updated privacy policy and terms of service. Whether you choose to continue to use the pendant or not, your data will remain safe. We just launched a feature to make it easy to...
We really appreciate you paying for our service, but we are going to cancel. We're going to end, and thank you for your money, but we're rich now. Meta's purchased us. We're okay. I'm curious to know what the price of this was. I can't imagine it's too much, but or what Meta even wants with this. You're telling me you even needed to buy this? Like, this company started a year ago. Why don't you just create your own? I never understand that with like these brand, like AI companies buying these brand new AI companies. Like, how long do you think he's been working on this pendant? Like, how many customers do you think they have? And he said they're sunsetting their old customers. So he's not buying it for the book of customers. He's buying it for the tech. Good news. We don't need you anymore. Yeah, no, honestly, though, that's what it feels like. That it's just an Amazon Alexa. Like, obviously, there's going to be some things of saying like, hey, can you do yada, 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 put it in my phone, put it in my thing, send a message to this person. What there, honestly, you guys drive me nuts with these pendant or patent related comments. A patent on what? Talking into a device that records notes into a, you know, every single big tech company, phone, iPhone, all of these things do that. Like, you can't just patent, like, the patent comments drive me nuts, especially on technology. How are you supposed to patent a chair? Oh, my chair has 4 legs and a back stand. There's my patent. I don't want anything with 4 legs and a back stand on it. Okay, well then we'll put 4 legs and a back stand, but the back stand's adjustable. Okay, the patent's no longer viable. They've made an upgrade on your product. You can innovate on a patent, and then the patent's no longer relevant. You think these patent or the pendant patents are worth anything? He's not even the only one. I've seen a bunch of these pendants. Saw what about the rabbit thing, or what Johnny Ives is working on with OpenAI? They said that was going to be some sort of a phone-like accessory. The device could have 100 patents. Come on. Let's get real. How many patents does Apple have? And then how was the Samsung and Pixel devices even created? You could just patent your way into zero competition. It's a brand new business. They put an air tag on one side and a microphone on the other, and then people go, oh, you know what? Yeah, It's indestructible. They needed to buy it because they couldn't have innovated on that. Meta was stuck. Apple patented the swipe to unlock. Yeah, they're the only company that does that. Oh, okay. I just did it. Oh, my bad. My Samsung does that. Okay. Okay. I'm still worried we're not going to get a cut this month. Yeah, but then, you know, what happens? We get a cut next month. Like, there is definitely a possibility that we don't get it, and SoFi does take a hit in the short term, but I don't foresee them dropping below like $24 on that news or something. I'm in it for the long term. And plus, I do think we're going to get a cut. So, yeah. I like the Meta glasses as well. You know what they should patent? They should patent everything around those Meta glasses. The speaker phones, the glass or the AR part, and all the technology and the way that they do that. Yeah, patent that all up. And then Apple will never be able to find entry. Like, I've been alive long enough to see innovation just happen consistently. I'm not saying patents are not great, but it has to be in a super, in my opinion, nascent business, not in technology. Technology moves way too fast for patents to make any sort of relevance. Like even SoundHound, everyone says, oh, no, they have a bunch of patents. It's like, you don't think OpenAI is going to be able to offer voice services to enterprise customers for drive-thrus and all of these things because SoundHound has patents? They'll do it a different way. Yes, I know Apple has a ton of patents, but it hasn't stopped competition. I'm just saying there's 1,000 ways to solve a problem. Okay. I am curious to see what Joseph Carlson says about the Netflix deal. Okay. Let's take a look at the markets and then I will go. Unless there's something else that we haven't covered or haven't seen, or, you know, we're expected to see something in the schedule, but it's a Friday. I'll let you guys go early. Reddit's up 6%. Possibility of S&P 500 inclusion today? Maybe. We also have VRT up nearly 2%. Potential S&P 500 inclusion today? Maybe. SoFi, potential S&P 500 inclusion? Down 6.4%? Maybe. But, yeah. 8Co Holdings down, White Fiber down 8.2%, CleanSpark down 8.3%, FG Nexus down 4.8%. Sorry, 8.4%. These are a lot of like all quantum names are down a ton today, you know, down nearly 5%. D-Wave down 4.6%. DraftKings has been getting its butt kicked. Absolutely kicked in. This one has not been able to catch a break. In the last year, down 24.7%. I don't know. It'll be interesting to see how they work alongside prediction markets as well as also integrating with their own. They're they're purchasing their own prediction markets business. I forget the name of it, but yeah. Your calls are insane. You know nothing. They have to buy that pendant. I am a patent expert. All right, man. No, I do make bold claims, and they're not guaranteed to be right. It's just how I see it. I guarantee you there's going to be a lot of AI hardware companies that somehow are going to surpass the patents that were so defensible a year ago, whenever people thought that limitless AI was the greatest thing since sliced bread. Somehow Apple and Samsung and Google and OpenAI and all of those companies are going to somehow compete through those patents. Somehow. So, excuse me for not caring too much about patents in an extremely fast-moving market. By the way, Tesla, one of the companies with, the most innovative tech that you could possibly see, how many patents do they have? How defensible are they trying to be versus their technology? Or is a lot of it actually just open sourced? You know nothing. All right. Why do you think Meta bought them? Because the company was probably extremely cheap, and it gave them sort of a, step closer in that direction. Maybe it was an acqui-hire. Maybe they liked the engineers that they were working with. You think they bought them for patents? Has anyone got a Tesla engine in another EV, or is it protected by patents? They don't have patents. Tesla does not have patents. A lot of their stuff is open sourced, and they are just essentially running much, much faster. It's something that Elon Musk is very proud of. Maybe Meta bought to delete. Dude, they have like 10,000 customers. How many people here are using, are using limitless AI? Would one be the correct answer? Two? They're not buying it to get rid of that competition. And in fact, I actually think that's illegal. That's anti-competitive. Never heard of. Yeah, exactly. Exactly. They probably got it for very, very cheap. But the SPY is up, NASDAQ's up, both up 0.2%. SoFi's down. I'd probably be on a Mit's channel later to see if they end up getting into the S&P. And yeah, I would place it probably at like a 10% likelihood. We'll see. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now.